last. Accounting. So what would the debit is to what account? Depreciation expense. For how much? 2020. Very good. What's the credit go to? Accumulated depreciation. What kind of account is accumulated depreciation? It has a credit balance, but what's the classification of account? Asset, liability, stockholders' equity. Do you remember what it's called? It's called a contra asset, a negative asset. Next, this is a good one. Commissions for December will be paid to Perry's sales staff for January 5th. That's the beginning of next year. Commissions payable account right now has a zero balance, but we owe them commissions at $22,000. So what is the journal entry to record this adjustment? Debit commissions expense for $22,000 and credit what account? Commissions payable, $22,000. Excellent. Well, this is a good one. The company loaned $20,000 to a customer on July 1st for 1 year at 8% interest. The customer will pay the principal and the interest on the loan June 30th of next year. No interest in connection with this loan has been recorded. Record interest revenue for the year. How much interest, when you give me the number, I want you to tell me how you calculate it. How much interest are we owed? What's the formula for interest? Principal times rate times time, right? So how much is the principal? $20,000. If ever you're stuck on an interest problem, just write out the formula. Principal times rate times time. So principal is $20,000. What is the rate? 8%. And for how long has this loan been outstanding that we need to record interest? Not 1 year. For how long has this loan been outstanding that we need to pay interest? 6 months. July, August, September, October, November, December. 6 months. Because we loaned the money out on July 1st. So it's been outstanding for 6 months. So you'd write 6/12. So that amount would be equal to $800. And the journal entry is what? Debit interest receivable for $800 and credit interest revenue for $800. Excellent. Next, Perry paid an entire year's rent, $14,000 for a warehouse, which the bookkeeper recorded as prepaid rent. Did this on July 1st. Record rent expense for the year. What is rent expense for the year? How much is it? How much? 14,000. Reread the problem. Paid an entire year's rent, $14,000 for a warehouse, which they recorded as prepaid rent on July 1st, 2012. What is the monthly rent? It's $14,000 divided by 12. How many months rent were used so far? 6 months. So it'd be 7,000, right? Because 14,000 is for the whole year. But we started this on July 1st. So we're only talking about a half a year here. So we're talking about $7,000 worth of rent used up. This is very hard. Now, what's the accounts? So it says here the bookkeeper recorded as prepaid rent. If I did a T account, prepaid rent. This is what's in the T account right now. What should be in prepaid rent at the end of the year on December 31st? How much? 7,000, because I used up half of it. So if I used up half of it, then the missing number must be $7,000. That's what I used up. So the journal entry would credit the account prepaid rent. And debit what account? By the way, this is an asset which I'm crediting, so it's going down. Debit rent expense. Why? Because this is an expense that is going up. I'm taking the 7,000 out of the asset and I'm expensing it. Review the adjusting journal entries above. Identify each journal entry account as a balance sheet or income statement account. All right, let's skip this. This is silly. Let's fill in the numbers here. What is my interest revenue? Interest revenue is a credit for 800. What's my depreciation expense? Is a debit for 2020. The commission expense was a debit for 22,000, and the rent expense was a debit for $7,000. Okay, the next thing I'd like you to do now